I see this idea a lot about how taxes kill businesses and jobs. It's particularly prevalent on the right, but you really see it, but it's not an issue that gets enough of a critical look, especially when looking at corporate taxes. A lot of people make this argument that, oh, you lower corporate tax rate, or eliminate corporate taxes, or whatever their preferred approach is, and look at how much more money businesses will have to hire new people and to expand their business. But that misses a very critical part of how taxation actually works. Businesses pay tax on profits, not revenues. Now, revenue is all the money the business makes. So if you're looking at a small business, let's say it makes a revenue of $500,000 a year. Let's say it's a restaurant, it sells dishes at an average of $10 a dish, and it sells around 50,000 dishes a year. So with that $500,000 revenue, it's gonna have to pay for all the costs of the business, the cost of getting the food itself, the cost of hiring the staff, the cost of the lease of the building it's located in, and then whatever is left is the profit. And so what that means is that when you're deciding about how many people you're gonna hire, you're only looking at revenue because one of your expenses is your salaries and hourly wages that you pay to employees. So I think what a lot of people think is that, let's say a business has $100,000 in profit at the end of a year, and it's thinking about hiring new people, and it costs them $45,000 each to hire a new person in whatever particular new position. Now they think, they can definitely hire one new person, but because they're paying, 35% in taxes, they're only going to have $65,000 instead of $100,000, so they wouldn't be able to hire a second new person. But that's not how it works at all. They could hire both those people. Now their profits would drop quite a bit. They would only have $10,000 left. But if they're in an investment stage of the business, that might be fine. And if the owner of the business pays himself a salary and it's a single owner, then it would definitely be fine. And the only part they would pay taxes on is that remaining $10,000. They wouldn't pay taxes on the original $100,000 that they had because it was no longer profit once it becomes an expense. So this idea that lowering taxes gives businesses more money to expand hiring and thus expand jobs is completely absurd. It actually reduces some of that incentive because when they're faced with the choice between taking money in profit versus hiring new people, currently, if they took it as profit, they would get a lower percentage of it because that part would be taxed. Whereas they could spend it all when they're putting it into a salary or hourly pay for an employee. But businesses, both big and small, are heavily invested in us believing in this narrative because it gets everyone else who is not a business owner to be on board with lowering taxes on businesses because they think it will create more jobs by directly giving businesses more money to spend on hiring. But that is simply not the case.